Gold steadies and is set to end the week higher, on track for its first weekly gain in 4 weeks. And our next guest sees the cards stacked in the metal's favor. Joining us now in studio is Ken Hoffman of Bloomberg Intelligence. Ken, good to have you back on the show. Welcome back. So you come with a bullish case for gold today. What's working in the metal's favor here, Ken?
I mean, look, I think there's been a very long-term bullish trend under gold for the last few years. Yeah. Remember, everyone was calling for gold to go to $700 or $800 a few years ago, and it never really got there. It sort of stabilized at around $1,100 an ounce. And then obviously this year we had the run up. It's up about 20%. But I think people are too caught up in Fed hikes and things of that nature, the elections and Brexit. There are some very long-term fundamental trends in gold's favor.
Well, the rate hike, let's focus in on this. Obviously, it's kind of the elephant in the room when we're looking at gold prices. Do you feel it almost just needs to happen for gold to move on here?
I'm tired talking about it. You're probably tired talking about it, so it probably does. But I think in the scheme of things, it really doesn't matter. It may have a couple-day dip when it happens, and then people will get back to, again, what we'd like to talk to is, what is the long-term trend of gold? What is the value of gold versus paper currencies over a very long trend of time?
Well, let's talk about that. I know you did some research on money supply here. So how does the ratio of paper money to physical gold work to gold's favor here?
Well, we talked about it many times on here. Gold is a currency. And so you have a stack of gold, and then you have a stack of dollars, and you have a stack of Chinese yuan, and a stack of Japanese yens, and they're all relatively traded versus one another. Gold can increase about 3% of the global stockpiles, roughly 2.5% to 3% a year. And what we've noticed is the other piles of paper, they have been ever increasing. So the Chinese yuan is up around 11.5% over the last year. And that has been increasing. More interestingly, the US dollar is up about 7.5% over the past 12 months, its money supply. And it has actually been increasing. So what that's saying is it's going to take between 50 and 100 years to double the amount of gold in the world. The US dollar will double in about 6 or 7 years, and the Chinese yuan will probably do it in about 4 to 5 years. So when you look on a relative basis how gold is valued, if you translate it into your dollars or if you translate it into your yuan, et cetera, all of a sudden gold is going to look much more valuable.
Well, speaking about gold supply, what are you seeing on the mining front in terms of production?
What was interesting about gold is you saw the price of gold drop, and when the price of gold dropped, all commodities dropped. So the countries where you produce metals, Canada, Australia, saw their currencies really get killed. And when that happened, the costs for the mines came down. That has been reversing, and as soon as we saw the reversal in energy prices back up, as soon as we saw the Australian dollar and the Canadian dollar rise, all of a sudden costs started shooting right back up again. And that's something that will keep the bottom part of gold from falling out, because if the price falls much further, we're back into where we were a couple of years ago about closing mines because they'll become unprofitable.
And it's interesting, the US dollar index hit a 7-month high this week, but gold didn't buckle under the pressure here, which shows strength for the metal.
Yeah, I think on a long-term basis, there's just so many things behind gold that just really make it, think about it as a very long-term trend, not a short-term trend.
So I know you can't give an exact forecast, but could you say where you think gold is headed within the next 6 months?
Well, let's look at it this way. If you look at gold on a dollar basis and you just took all the dollars in the world and divided it into all the gold in the world, today it's worth a little more than $2,000 an ounce. That will double within 7 years. So you'll be about $4,000 an ounce of US paper money per gold.
So you think the real value of gold should be $2,000 an ounce?
What we've seen in the past is the price of gold has gone up to that dollar limit. When we got up past 1,800, it sort of bumped up to where the dollar, real number is, and then it came back down, and then it moved back up. And remember, that's just US dollars. Forget about all the other currencies in the world and how they play into it. And look who's the biggest buyer of gold again this year. It's China. Why? Because China issues the most paper currency, and people there say, wait a minute, I know the value of the yuan is going to drop long term. I better buy something that will hold its value, that's a currency, that I can easily trade, which is gold.
Ken Hoffman, always good speaking with you. Thank you for your thoughts. Thanks for coming by the studio.
Thanks for having me.
And thanks for watching this edition of Kitco's Gold Report. We'll be back next week. Thanks for watching.